What's going on, everyone? In today's video, I'm going to be going over one of the simplest and easiest price action techniques in the world. So if you guys are beginners, intermediates, advanced, it doesn't matter. I'm going to be doing a complete, well-rounded analysis of this price action technique. So let's get into the video. I'm just going to be picking a random day on the chart, and we're going to go from there. So I'm just going to use this scrolling bar. So if we go left, right, left, right, left. Okay, boom. February 7th it is. The rules with this specific trading technique that I learned from a couple YouTubers, Thomas Wade and Pat's Trading specifically, are basically we're just using trend lines and trend channels. And the rules with these trend lines and trend channels are that once there's a break and a new low, we consider them to be potentially over, and we can start looking for prices to then go in the opposite direction. So we have a downtrend here, we have a break and a new low. So at this point, we start thinking that the downtrend is potentially over. And the reason that these rules work is simply because other traders all around the world are using these same techniques, and it's just basically interpreting the bars on the chart as the trading psychology of the markets. So these illustrations just allow us to interpret the chart sort of like a language. So once again, we have this downtrend, we have a break and a new low, and we don't want to look for any short setups because the downtrend is potentially over. But what we can see is that we have a lot of resistance here, and it looks like we're just starting to form a mini trading range. So what we like to do with trading ranges is we like to draw a midline, which allows us to see if they're valid in the first place. It looks pretty valid to me. And we want to always draw our trend channels no matter how short the downtrend is. So even though we had a break and a new low of this downtrend, there's a short-term downtrend that formed right here. And the rules with trading ranges are that at the bottom of trading ranges, we want to look to buy, and at the top of trading ranges, we want to look to sell. So let's see if we can get a nice short setup. And another thing with trading ranges is that the breakouts, like we see here, fail a lot of the time. So in a downtrend like we have here, we want to look for second entry shorts, which is just characterized by two failed attempts in the previous direction. So we're going up. We have a first entry short after this bar because the next bar broke below it. So now if we get another trigger below a bar, such as we have after this one, that is considered to be a second entry short. Now the reason we didn't want to take this second entry short is because the bar is a doji and it's not bearish enough. And if the bar had been bearish enough, then we can start considering to go short. If it also has several other factors met, such as a downtrend being intact, we're at the top of the trading range, it's a potential failed breakout. So if that bar had been nice, then it would have been a nice trade. But nevertheless, we have this short-term uptrend as well. We have a break of it and a new high. And now we have a nice bearish signal bar. Can we go short here? An aggressive trader might say yes if they have their trading range as something like this. So let's see if it would have worked out. But in my opinion, I want to wait for the really, really, really high probability trades, so I would probably skip this one. And it ended up working out potentially for 1 point scalp, depending on where exactly you sold. But as we see, the next bar actually broke above it. So it depends on how you look at it, but it's not a very, very high probability trade, even though we're at potentially the top of this trading range. But now we're going down again, so now we can start looking to see if we reach those prices once again, and we have a nice bear signal bar, and we have a break and a new high in the uptrend, then we can start thinking to go short. So now we have another opportunity here, but even though there's a bear signal bar, we have to respect even the shortest of uptrends. We have to respect that uptrend. So we have a break of it, no new high yet, no new high, just a lot of choppiness before we end up pushing down. So now we're expecting prices to once again bounce out of here. But we can't just buy here because there's a bullish signal bar. Once again, we have this short-term downtrend. Now we have a break, we have a new low, and now we actually have a nice bullish signal bar. But we have to keep in mind at this point of the day, we've been just in a overall downward trend of prices. So I would prefer to wait for a higher low or a failed second entry short, because once again, all the traders who are thinking that this downtrend is still intact, even though we technically had a break in a new low, are going to look for second entry shorts. So if we're counting from this new low, we went up, we had a first entry short, and now we have a potential second entry short right here. But we don't want to go short because there's already a break in a new low of this downtrend. The prices are getting very choppy, and once again, we're at the bottom of this trading range, and we want to be looking to go long. And that's exactly why. If you had went short right there, you would have got trapped. So at this point, if the next bar breaks above this bullish bar, then it will become a failed second entry short, because all the traders who went short are going to be trapped thinking that the downtrend was still intact. But can we take this failed second entry short and go long? If you're looking for the only the most high probability setups, then no. Because in reality, this is really a leg up. We have a break and a new high, and we don't want to go high at the top of this move, especially because these bars are really just chopping around. So these trend channels and trading ranges even work at the micro level, because traders are trading these micro trends. And even though we're looking at this specific chart, not every single trader is looking at a 2,000 tick chart like this one. So even though this trade worked out, I would avoid it. So now once again, we are just chopping. We have a break of this short-term downtrend. No new low yet. So we have to keep that in mind. We have a first entry short, and we bounce up again. And now we have a second entry short failure again. Can we take that? I would avoid it because, like I said, we have a short-term uptrend. We have a break and a new high. So I would avoid going long right here. Let's see if it worked out. We actually didn't even get a trigger. And that signals to me that it was smart to avoid taking that trade, because the bars ended up just getting stacked up. So now prices are expected to potentially reach the top of this trading range once again. But we have to be careful of rushing a trade. So once again, let's draw our short-term downtrend. We didn't get another new low of this downtrend either. And for good reason, because prices end up rocketing up. So all the people who tried to go short ended up getting trapped. Let's draw our short-term uptrend. Then we have a break and a new high. And now, if we zoom out and we see this bearish bar, that actually looks like a nice short trade to me, because it's a very bearish signal bar. We have a micro break and a new high of this short-term uptrend. We're at the high of the range. Most breakouts of trading ranges will fail. We're expecting to at least come back to the EMA in the short term. Let's see if it would have worked out. You would have had to wait it out for a little bit, but eventually prices did come down, and you would have actually had enough for about a 2-point scalp. So now prices are stalling. Let's just draw our mini short-term trading range once again. And prices just begin to rocket up again. So now let's draw another short-term uptrend. We have a break and a new high and a little bit more choppiness. Now at this point, a lot of traders might think, okay, let's draw a wide uptrend like this. That seems valid, right? In reality, not really, because even though we have a few touches at the bottom side of the trend line, if we look at the top, we didn't even reach it here. We're really not fitting very nicely. So I would avoid that and stick to short-term trends like this that really fit the price action. So now at this point, we had a break in a new high of this short-term uptrend. So we don't want to think to go long anymore, because look, we actually have a potential second entry long right here. We have a new high here, first entry long for a matching high, Then we go down again, second entry long. So in this case, if you would draw on a uptrend like this, you might be thinking, okay, I might go long right there, when in reality, this potential uptrend is over and you would have got trapped. So let's once again draw this short-term trading range. So now at this point, we're just waiting to see any high probability setup. And now that we rock it out like that, now's where we can draw our short-term uptrend once again, and we can look for second entry longs. So we have a leg down, first entry long, and actually a hidden second entry long, but that's a little advanced for this video, and we're below the EMA, so we don't want to go long. And now we actually have first entry short here, second entry short failure, and a higher low. But I would avoid going long there again just because the bar is fairly big. Yeah, it's about a 6-point bar. It's not worth the risk for a 1-point scalp, even though we were expecting a new high of this uptrend. But it's okay. We just want to be patient and wait for high probability setups. This method is very, very powerful only if you're extremely patient and have the guts to wait for the high probability trades. And sometimes in uptrends like this, you just won't get the greatest of entries, but eventually you'll get one that'll make your whole day. So now, at this point, let's draw our uptrend once again. So we have this short-term uptrend, we have a break, and then we actually have another short-term uptrend. We can also potentially start looking for a wider trend channel if it makes sense, but as we see, it really doesn't fit on the downward side, so let's just focus on this short-term uptrend. So we want to look for second entry longs. So we have one leg down, first entry long, another leg down, and then we have a second entry long triggering right there. Now, unfortunately, if we had gone long right there, the signal bar is no good, so we cannot do that. But what we can do is look for a higher low confirming the second entry long, which confirms the bulls are still in the market. And we get that right there. So here's where I would go long, expecting to reach these highs. We don't reach those highs, but once again, the trade would have worked for about a 2-point scalp, which is more than enough, before we eventually start working lower. So now we have another short-term trend, break, new low, signaling this downtrend could potentially be over. We have a first entry short, and then we eventually just go lower again. We do have another lower high here, confirming the second entry short. Let's see if there's anything that'll make us want to go short here. Not really, no confirmation of the downtrend. It would have worked, but once again, we're only looking for the highest probability trades. And even though I accidentally saw what happened right there, we have a new low here. We have a first entry short, another second entry short, a nice bearish signal bar. But once again, it just looks too congested to me. But now that we keep working lower, we've already been rejected by the EMA several times. This actually is a nice advanced trade, depending on how you look at it. So technically, we have this downtrend here. We have a break and a new low. So we're not really trying to look for shorts anymore. We also have this short-term uptrend, which you might draw like that, but in reality, the experts are drawing their trends like this with a break and a new high. And you can go short here if you're playing the range rules, which once again are very powerful. So we really have this mini range. So all the people who are playing the micro trends and trend channels are looking at this and thinking, okay, I have a failed breakout, nice bearish signal bar. Let's go short right there. and it ended up working out. So now that actually looked like an incredible trade for the day. And now we have one leg up, break, new high, potential second entry short if the next bar breaks below this. We have a nice downtrend. Once again, here's another second entry short that looks pretty textbook to me. And that also ended up working out for about a 2-point scalp. Almost 2.5 points. So now we're just chopping around. We actually have a failed second entry long right there. This is very enticing. So we have a new high. First entry long, we went down again. Second entry long, failure. But we really should consider this short-term uptrend. Prices are looking kind of choppy. But I would skip that trade for the reason I stated, as this short-term uptrend is in play, even though it worked out. So now we had a break and a new low of this short-term downtrend. And then finally, prices just keep rocketing down. So now at this point, we might want to zoom out and see where prices are headed. And it looks like they're heading towards these lows. And the reason for that might be that we had these short-term downtrends that never ended up getting a break and new low. This one, we just had a break and then we rocked it out. This one again, we had a break and we rocketed it out. So all the traders who were thinking, okay, we had a major uptrend, we started reversing, we still need to reach these lows, because all the traders who are following these price action rules are thinking the same things. They're seeing this downward momentum. They're thinking, okay, that's a reasonable price target. So let's see if we can reach those lows. We keep working lower and lower and lower. And we have this downtrend, break, new low, some more choppiness. Did we reach the low of the day? And yeah, we reached it by good margin. So at this point, we could start thinking that the downtrend is potentially over and we can be looking for long setups. We do have a second entry long right there. If we draw this short-term uptrend, we have a first entry long, second entry long. I'd argue that trade looks pretty nice. And it ended up working out once again. So let's go over it one more time. We have this short-term uptrend. We have this short trading range, but it's really a breakout pullback pattern combined with a second entry long. So it's just multiple reasons to take that long. And then we have a short-term downtrend. We have a break and a new low. Prices are bouncing here once again. It's starting to get later in the day, later in the afternoon. Prices are just looking pretty choppy. It looks like we actually have a spike and a channel pattern. We have a first entry long, second entry long. But prices are just looking pretty choppy to end the day. That's going to wrap up the video, guys. Hope you enjoyed it. Hope you learned some things. Leave me a comment. Let me know what you guys think. Leave me some feedback. And I hope you guys have a good trading day. Peace.